specific initiatives I would request for consideration. One is increasing the FDI limits for from a private capital standpoint for public sector banks. Currently, it's capped at 20%, and you could actually look at increasing it between 20% to 49%. That would actually, to a great extent, provide a lot of capital to public sector banks where there is a need for capital. From a risk management standpoint, consolidation of cooperative banks and laying down a path for them to transition to small finance banks is the second initiative that I would recommend, because rationalizing the number of cooperative banks will genuinely, from a systemic risk standpoint, improve the supervisory ability and thereby help bring about a greater financial stability. So one of the significant areas where there could be a focus is basically understanding where India is on the energy security journey and identifying the gaps there. Still, we have a dependency on fossil fuels to a great extent. So it would be very important to kind of create a lot of financing arrangements specifically for setting up the whole energy infrastructure around alternate sources of energy. Developing infrastructure around storage and transmission for renewable energy sources may be actually a good step in that direction from a perspective of moving towards a more climate friendly framework. The single most important need for NBFCs is liquidity. You address the liquidity requirements of NBFCs, you will actually ensure that the sector grows more. And NBFCs lend a lot to the MSME space. So from that perspective, you will actually also see certain order effects in terms of increased credit to MSME. Now, the way to provide liquidity would be to create a framework where you could actually provide a liquidity window to the top layer NBFCs as well as upper layer NBFCs that the Reserve Bank of India could consider evaluating. So, sort of like a liquidity backstop arrangement that exists for scheduled commercial banks, you could actually look at providing it for certain categories of NBFCs. So I think from a IFSC Gift City standpoint, one of the most two initiatives specifically is something I would recommend. One is the movement of foreign currency between the domestic tariff area and IFSC Gift City. So relaxing some of the FEMA capital and current account transaction rules would actually be helpful from a liberalization standpoint to kind of boost that economic activity, because foreign exchange reserves are a need of the day. And from that perspective, FEMA requirements from this perspective would be useful. The second, I believe that having a single window uh, clearance for everything at IFSC Gift City in one go with more detailed, articulate manuals and requirements being prescribed, I think is something that would genuinely promote ease of doing business, and that's something that they could actually consider and evaluate. Join our budget webinar on 1st February between 4 to 5 p.m., streaming live on Grant Thornton Bharat website and LinkedIn.